Hey everyone, welcome to Breakout Wednesday for the 5th of October 2022. It is currently about 9 p.m. on the West Coast, 11 p.m. on the East Coast. First of all, remember this is never financial advice. We're not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Missed last week, apologies. I'm a bit late this week, bringing it out. Been away with the kids. Now, here is a chart of the All Lords, okay? Obviously, everyone probably knows by now the surprise interest rate decision yesterday to only increase by 25 basis points instead of 0.5%. And so that was a bit of a surprise and the market rallied. And so that's cool. We're still very much in a sideways, choppy, volatile, I'm calling it a bear market. Call it whatever you want, doesn't really matter. But the fact is, this is a hard market to make money. There's a lot of fake outs, a lot of false breakouts. And we have very sharp rallies followed by obviously giving back and then some. And so it is a hard market to trade. People are tired, people I talk to are pretty tired of the market. There's a lot of people who are kind of traders and I know who have kind of been giving up, stepping aside, not trading as much, or really just kind of losing hope that they're ever going to make it. But there definitely, I don't think there hasn't really been that last stage desperation that you usually get at the end of a bear market where there's completely just, everyone has just left and given up 100%. And so I'm not saying we're going to go lower, but I don't know, obviously no one knows, but it wouldn't shock me if we did have more legs down, okay? One thing's for sure is that I'm very happy to be dollar cost averaging into this market still. I've been doing so a lot on index ETFs and probably been, small amounts each time, right? That's the whole point of dollar cost averaging, but I just have no drama whatsoever in just picking more and more index ETFs and index funds up, okay? Now, just quickly, I've got a whole bunch of shit to rattle on and crap on about today. I had a lose on TER, okay, faked out, quick loss on it. That is the way things go. And NEU, I took the profit on, okay. So NEU, I'll put moving averages back on. This is the trade that I know a lot of people kind of were in, I use exits, I use my moving averages, I use trend lines, but I just got out of here when we had a close below this trend line, okay? So a good trade in NEU, and a loser on TER, and a challenge market with the other trades, okay? But a lot of break evens, a lot of small wins, a lot of small losses, kind of a lot of grinding. But the whole point at the moment is just to keep a hold of your cash, hold on to it, and wait for the good times to come, wait for the good trades to set up, and then just go for it. Some quick stuff. First thing I want to talk about is there are a whole bunch of these. I'm going to get rid of these averages just to make things easier. A whole lot of channels appearing, okay? And this is classical for bear markets, right? You get a lot of channels appearing, and there can be some really good trading out of those channels. Here's an example of Apple that just loves its channels right now, and it's just bounced off the bottom end of the channel and is rallying. And I'm just going to rattle through a whole bunch, and it doesn't necessarily mean these are trades because I can't trade all of these, but it is interesting. Okay, here's ASX obviously on the ASX. This is a stock that has just put in a very, very long channel. The only real oscillator I ever will use is a MACD. I do like looking at them sometimes. I do like divergences on MACDs, especially when we have a big trend in stock, highly liquid, blue chip if you want to call it that. That's given us a very, very oversold MACD signal or, a MACD divergence, right? I do look at them. I don't really talk about them on here, but I do think it's the best indicator out there if you have to choose an indicator. And I definitely think, divergences work better from the long side than the short side, right? And so, ASX is coming out of this big channel, MACD is just coming out of it, and so there's a lot of these around, and you find that when in true bear markets, when they have very vicious rallies, these are some of the best setups, and I've literally got about 50 of these in a watch list. But Bendigo Bank's another that's coming out of a channel with MACD divergence. and oversold MACD. Another one, PPM isn't as classic, but PPM is. We have some big volume coming in on PPM. Okay, obviously these finance stocks, I mean, there are a lot of sectors that get super hit by increasing interest rates, and others that get less hit, right? So I'm not going to go into that this second. Coles, okay, it just had a gap down, another gap down, okay, and it's really kind of, it's very rare to see Coles stay this oversold for that long, okay, and that's not really a channel, but you get the point. Woolies looks similar. LYC has a a huge tight channel there, not as clear as the ASX one, but what's another one? And I just wanted to quickly point out the old GRR trade, okay, that failed back here and had this fake out, okay. Let's just look what it's done now on the short side. It formed this consolidation, tried to break down, failed, and then broken up, all right. And so I'm long GRR. I was hoping it wasn't going to break today, but I've taken a small position on GRR today, all right, just on a break above this level here, which I think was 73, right? Yeah, it was 73. So the break level was 73. And so the way I view these trades, obviously, I've said before, but, deleting moving averages is, I will, whoops, how the hell did I do that? Deleting moving averages is fine during a bear market, because they don't really mean as much, okay? They work great in bull markets, like a lot of things. But in bear markets, it's fine just to get rid of them and have a clean chart until for various charts and various setups, right? And so GRR had a fake down, really stuffed around here, just not wanting to just collapse lower. And then it's had a break up, okay, and I call this a breakout, sorry, even though it's not a classical breakout in the sense of things. But to me, this is a 5 or 6 day breakout, but more importantly, it's happened after a fake out to the downside and a real failure to kind of drop lower, okay. I always trade smaller on these, but the risk reward on them is absolutely spectacular, okay, because if I got in here and I'm going to play this and hopefully have a rally, a really nice rally, okay, I don't really care, just as long as it rallies up here, I'm going to have a 5 to 1, 6 to 1 risk reward, and my stop is just down here, okay. So if it just fails and turns around, boom, I just get out for a really small loss, no biggie. Not as if I haven't had some losses lately, who cares, right? But if I'm right on this and this just has a nice recovery rally, I can just bank a huge risk reward trade, okay? And so this is kind of a setup I don't talk about a lot of. I think that for pure traders, this stuff is gold, and I do have those classic setups I love with all the moving averages and consolidation breakups, but let's face it, like in a bull market, in a bear market like this, they just don't happen much, okay. The NEU trades that I was talking about a few weeks back, like they're here, they're not happening every week, right? They're hardly happening every month right now. So I can't just wait around for those. Being kind of an impatient person I am, I want some trades, and so I need to go and think outside the box. And trades like the GRR one is certainly a higher probability setup that I really like. So I will try and talk about more of those, especially if this bear market continues for heaps longer. Now, I'm going to rattle through some other trades, okay, that are just setting up still. Not all of them I can take, but ICT just broke out of this really nice base, has huge revenue growth, and now it's based in here in a consolidation pattern, okay. It's just if you look at a weekly chart, it's only had really 2 weeks, okay. I don't count this bar as a base, that this one and this one are base in. It's just really this is the second week of base in. It's not long enough, but I'm certainly looking at it, and if it can just put in a good, it needs at least minimum of 3 high tight weeks, so it needs another whole week on a weekly chart, okay. So we're looking at another 7-8 trading days for that to give a proper base, but it's certainly in a nice uptrend after a huge base breakout. So I'm watching that one. It's on the watch list. IGO I'm watching just because there's clear relative strength here, okay. It's obviously materials mining stock, but this looks like this is sort of chart you'll find in a bull market, right? Not a bear market, and compare it to some of all the other big miners. It's setting up, it's looking super nice, and I would love it if it would just chill out here and not break and just come back and and pivot and all that sort of stuff. But I don't know if it will. I don't know if I'm going to trade that one, but it's certainly showing a lot of good relative strength, right? And so another one that I talked about 2 weeks ago is ResMed. Broke out today, and ResMed's showing huge relative strength. Okay, here's a weekly chart of ResMed. I've talked about ResMed over the years. Like, if I had a gun to my head about which stock on the ASX was like the Apple equivalent that I would just hold and never ever sell, I mean, ResMed is that stock for me. As I've mentioned so many times, I've owned ResMed for a long time, and I just don't really have plans to sell it, right? Unless something huge changes. I've added to it here with a really wide stop. I just think the relative strength on it is crazy good, and there's clear money pouring into a lot of healthcare stocks, biotech and healthcare. But ResMed to me is the leader in that, and so bullish on ResMed. I'm going to stay bullish for probably a very long time. Okay, what's another one, guys? SWF. Okay, now, I was hoping this wasn't going to break. Let's get rid of all these moving averages because they're probably not helping us, but it did break today. We just had this really nice kind of, the thing that brought my attention was this volume. Okay, we had 4 days of increasing volume here from the, let's just look at the actual dates, all that stuff up, 23rd of June, 24th of June, 27th of June, 28th of June, okay? And then we had an ascending triangle form and really tight base action. We had this volume here. Okay, this huge volume on the formation, nice volume, then a breakout. Okay, so let's that is a cool setup, and I was hoping it wasn't going to break. I was going to talk about that last week. I apologise for missing that. Bloody life, another one, X64. Okay, and so I do believe this one had a change of name. I think maybe it used to be MML. Can't remember, but X64. This isn't good enough yet. It's nowhere near good enough, but I like the bottoming pattern here. Okay, I like the double top. I like the kind of head and shoulder reversal pattern that's kind of happening. But I need a tight right hand side to happen, right? Really, I just need probably another 7, 8, 9, 10 days of tight right side, and then I might trade that. Okay, but certainly interesting. Okay, now. Sorry guys, had to pause a sec. On the NASDAQ, there's this quick one I wanted to quick look at, and what was it? Yes, SNDX, okay. The market's opening in 2 minutes, so I'm hopefully going to get filled on this one tonight. But SNDX, obviously a pharmaceutical stock, and this is kind of one example of what I mean by a lot of biotech, pharmaceutical, and healthcare stocks. It doesn't look like we're in a bear market when you analyze all of their charts, because a lot of them have been base in, showing huge relative strength. There's been money flowing into them, and this is one example, right, on the NASDAQ. Okay, and so I'm in ResMed. I'm going to be in SNDX soon, probably, and I really like the space. I think that I've been working super hard on trying to figure out the sectors and stuff which may lead the next bull market, and I think so far all the evidence is pointing at alternative energy, as I talked about 2 weeks ago, okay, and biotech / some healthcare, and I haven't that opinion is flexible, and could change at any time, but at the moment that is really kind of black and white if you spend a lot of time going through charts and looking at the chart showing relative strength like SNDX, okay, like First Solar, and looking at which stocks are actually above their key moving averages with really good volume profiles, and obviously there's coal, and there's alternative energy, and then there's biotech, okay. And I can't for one but think that coal is going to lead the next 10 years, but alternative energy maybe. Obviously coal is very closely related to it in many ways, but then also biotech. And if this is too hard for a lot of people thinking, oh shit, biotech, a lot of the biotech stuff happens in America. It does for sure, but There is an ASX ETF these days that called Cure, okay, CURE. This is an ASX ETF, and if you research it, 94% of this ETF is made up of American biotechs, okay, and so there is ways to gain access to things without being a US trader, okay, and having to stay up late like I do and all that sort of junk. All right, now that's it, guys. Yeah, I think that's all I was going to talk about. I will be back next week. Promise. I apologise for missing the weeks here and there. Such is life. Chat next week. Bye bye.